Something that analysts in this space look at is, the kind of fundamental valuation metrics in this space are really focused on the actual usage of these platforms. Now, obviously, there are hundreds of different crypto assets. There are sort of flagship crypto networks like the Bitcoin network, the Ethereum network. And if you look at sort of the R-square correlations between core usage and value, they're actually highly, highly correlated. And what we're seeing actually is both for Bitcoin and for Ethereum in particular, there is some decoupling there, which is to suggest that both of those assets have been oversold. And so in the case of Bitcoin, maybe moderately oversold. In the case of Ethereum, potentially pretty significantly oversold. So the amount of usage remains very high. The amount of people deploying smart contracts.
The other piece of this, though, is the cost of mining. The cost of mining now way outstrips the cost of the actual coin.
Yeah, so it's not quite accurate. So the way mining works is there's a difficulty rate, and that adjusts every 10 or 14 days. And effectively, if it's too expensive for a miner, then they'll drop out. And so that's when you see the sort of hash rates go down. That means basically miners are not able to do it profitably. But effectively, there will always be a sort of marginal cost equals marginal value kind of equation behind the mining side of it. It does mean, though, that there are going to be less companies who are less vertically integrated who can compete in that side of the market.
Larry Bossidy is here. I didn't know you were a crypto guy, Larry.
Well, I'm not, but I follow it carefully. One of the things that I think people are apprehensive about is when is regulation going to happen? In other words, the SEC is supposed to be working on it. The FTC, the same thing. But you guys ought to be pushing for regulation. It removes some of the misapprehension that exists today. So where do we stand on that? When's it going to happen?
Yeah, so just to be clear, the U.S. actually has more regulatory clarity than almost any other market in the world. The exchange of digital currency with the banking system has been regulated for over 5 years. Companies like Circle and Coinbase are regulated under Bank Secrecy Act and money transmission laws. That's very significant from a consumer protection and dealing with financial crimes perspective. I think there really are a couple of things. I think one is, we've got essentially a collection of commodity markets, and then we have a collection of potentially kind of digital securities or digital securities markets. And there has to be a lot clearer definition between what crypto assets are, say, currencies or commodities, and which crypto assets are actual securities. And that's sort of clarity and guidance. And then the second is, once you have that guidance, what are the kind of market rules that should be applied, whether it's for secondary trading of these digital securities, or do we need national kind of commodity spot market supervision for the crypto space? We are advocating. So Circle and Coinbase, have been very active with Congress, with policymakers, with agencies, and everyone involved in this.
Jeremy,
and there's a lot of engagement.
What do you think the inflection? If you think there's an inflection point coming, or there's going to be a sense that it's oversold and it's going to go, what is going to be the thing that's going to change the game here? Because you also have so many investors who've lost so much money in this. It's unclear to me what's going to bring any of those people back, or whether you're going to have to find a whole new generation of investors.
Yeah, I mean, you really have to separate two things. So one is, you've got something like Bitcoin, which has a fundamental thesis around a kind of long-term, non-sovereign store of value, kind of digital gold thesis. You have to separate that from the kind of blockchain platforms and actually building utility value, building new financial products and services on top of this. A great example of that is something that we've launched with Coinbase very recently, which is US dollar coin. It's a cryptocurrency pegged to the US dollar. It allows you to use dollars over the internet at the speed of the internet at very low cost. That's a building block now that we can build a lot of other innovative financial products and services, whether it's in lending or in debt or in securities and other things. So these building blocks now allow us to have great use cases. So it's essentially moving into this utility value phase, which is going to drive the next wave of
so you're writing off
market
Bitcoin
interest
then,
and adoption.
Jeremy?
No, absolutely not. Absolutely not. I think it really has its adherence, and it has, I think, a very significant role to play as a non-sovereign.
So if we're having this conversation in 3 years from now, what's it worth?
I don't make significant price predictions, but I think it's certainly going to be worth a great deal more than it is today.
Have you bought any at this price?
I am long in the market.
Long in the market with a basis from 2011, or long in the market with a basis in the past 12 months?
I have a more recent basis in the market.
But what is your thesis around why it goes up? Because that's the big fundamental question.
Yeah, I mean, so again, you got to kind of separate all these different digital assets, are different forms of kind of crypto commodities or cryptocurrencies. They all have very different focuses.
I'm asking specifically about Bitcoin, since it's the one on our screen at the moment.
Yeah. I think the key thing with Bitcoin is it is unique in its security and its scale. And again, this idea that we need a non-sovereign store of value, a scarce non-sovereign store of value that individuals can hold and hold in a protected fashion, that's attractive all around the world.
We're going to have to run, but my other question,
be attractive.
Because you're introducing all sorts of other coins, whether you talk about a dollar peg kind of currency or Ethereum or something else, do you think there's a winner-take-all situation, or you really think that there's going to be dozens of these currencies?
I do not think it's a winner-take-all. We have a phrase, the tokenization of everything. We think cryptographic tokens are going to represent every form of financial asset in the world. There'll be millions of them in years.
And you don't think that ultimately undermines the value of Bitcoin or any of these currencies, given that there's going to be then all of this different supply?
They're going to have very different valuation frameworks. A security in a company is going to be valued on the basis of that company. A commodity that is used to consume a resource is going to be based on that. Yeah.
Okay.